Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, August 20th, 2013. We had a mixed day today where we had some pretty good stability in the NASDAQ side. That's the NQ side of the market, but we had weakness more so in the broad market represented by the ES futures. Internally, the market was not very good all day. The advanced declines were tellingly negative on the New York side for most of the day, and the trend and the VIX were higher on the day. The VIX on the cash side closed up 73 cents on the day, as you can see, but that was actually elevated all day, so that really kind of kept the long side of the market really on hold and really kept us looking, especially in the trading lab, on the short side. So we're not really looking for add-on longs, especially in the afternoon after the market had struggled internally all day, and we began looking for short ideas, and certainly that worked out. So let's take a look at the major future indexes and see what they have to tell us for the coming sessions. All right, so here's a look at the ES futures. A couple of key developments here. On Friday, we settled approximately at the 50 DMA, which was the low of the move, but today we actually made a new low on the move and a new low close on the move, and we definitely closed substantially below the 50 DMA. So we're certainly doing some technical damage here to the market. You can see the rollover here. The MACD line is now approaching the zero line, so a penetration below the zero line will start to kick in some downside momentum. The other key consideration here is that we're still in the neighborhood of the 50 DMA. This is really the first follow through below the 50. When that happens, usually what happens is you don't necessarily want to release right away. We're decently below it, so we may not get too much of a gaming going on right now, but I would not rule that out for tomorrow. We definitely could see that area gamed a little bit tomorrow, and see some bidding just kind of in the area of the 50 DMA, waiting for that momentum to develop. Key thing to be on guard for would be that break of the zero line on the MACD, and also then the follow through below and the release and the loss of the 50. All right, so here's the NQ futures. The NQs are definitely relatively more strong than the ES. The NQs are essentially, especially when you focus on the real bodies here, in this little trading range. Right now, it's hovering above the 6/8 line and is decently above the 50. The ES side is definitely more relatively weak, as we saw. The MACD line has a good deal of space before it gets to the zero line, so there's definitely those considerations to be made. Still hanging on to relative strength here. The other thing to keep in mind, though, is that we do have this double top in place on the NASDAQ futures. The 8/8 level was key resistance, as it often is, and we do have our 13 exhaustion in place on the seeker. So we had the first push up here was the 13 exhaustion. We had a retest here, and then we started to roll to the downside. Chart remains short-term negative, settling below the 10 EMA. We have to see if we can ultimately roll this to the downside and get some momentum and break out of this little range. Key support is going to be the bottom of that range, 3,066. Next support is going to come in at the static trend line. That's going to be very important support at about 331 in the NASDAQ futures. Obviously, if we return back to the upside, this prior settlement here from this gap at the 8/8 level at 31.25 is going to be the main focus for the upside bull. Here's a look at the market internals. Internally, the cumulative advanced decline line did not make a new high. We've got this double top in place. It's threatening to roll over. If we lose this prior low, that's going to be a real negative for the broad market. So that's something that we're going to keep on top of throughout the course of this week. Looking at the bottom chart here on the NASDAQ side of the market, we got back up into this trend channel, couldn't hold it, started to roll to the downside, and we can definitely see the negative action in the NASDAQ side of the market. That doesn't mean that the NQs are necessarily rolling over, because the NQs only represent the 100 largest companies on the NASDAQ side. A lot of this weakness is in the smaller stuff. Elsewhere internally, the 10-day trend is hovering just above the overbought threshold, and it's got a ton of room to go before the 1.35 oversold threshold. So we're nowhere near oversold in the market, and there's plenty of room to the downside if the market wants to use that. Here's a look at the risk on, risk off metric, which is the S&P divided by the TLT. That is the government bonds. We're still in this very positive upward channel. So for now, we're not seeing that classic risk off flight to quality into fixed income. So for now, we're still just holding trend and in doing so in a very constructive manner. This is definitely the one bright point for the broad market bulls. And this is definitely something that they want to see hold up. If this does break and we start to lose this trend channel, that'd be a major negative for the market overall and indicate a real shift in assets from risk on in stocks to risk off and to fixed income. Here's the multi-sector daily chart, which shows all the risk on assets taking a hit today. Even the XAU is a little bit lower on the day, but does have more of a positive bias. This level right here is going to be really important. We haven't been able to follow through above this prior resistance in the XAU. That's the gold line here. If we do break that out, that's going to be another potential haven for money to flow into. All right, now here's another fun one that we haven't looked at in a while, and I think this is very important right now. This is the Dow Gold ratio, classical technical analysis piece. We were in this upward regression channel, and as we were climbing up into this upward regression channel, we were seeing a risk-on appetite where people were taking money out of the hard assets like gold and putting them into soft assets and the growers like the broad market, represented here by the Dow Jones. We've seen this pretty decent break to the downside in this ratio, which indicates that the Dow Jones is losing favor versus gold. So this has plenty of room to go to the downside before we get into any kind of key resistance as far as this goes for the bulls and support for the bears. So plenty of room here to the downside, and this is definitely a notable break and a real change in character for the market. So if we see this spill over into that S&P TLT cross, that will be probably an indication that we're about to see some real momentum to the downside form. All right, so here's a look at the sectors ranked from best to worst on the day. The defensively minded pharmaceuticals was a top gun. Defense index was decent. Morgan Stanley Consumer Staples was also pretty strong. Things that were weak today, the housing sector was the bottom of the barrel, down more than 2.5%. The airlines, economically sensitive, were very, very weak. Gold and silver, as we talked about, was weak. The commodity-related stuff was weak as well. The BKX underperformed the overall broad market, so the banks were weak, and the oil service sector was also weaker than the broad market by a decent margin. So the things you really want to see start to show some strength here would be the gold and silvers. You want to see the oil services kick in. You want to see the transports really start to perform well. At this point in the move, banks can be a little bit soft. Technology can be a little bit soft. That's fine, but we do need to see the late cycle indices and sectors start to kick in. We're not really seeing that right now. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.